Hello traders, so in this lesson, we're going to talk about high probability liquidity sweeps. So as you can see here, your liquidity has been engineered via your swing high or swing low. So in this case, it's a swing high and price approaches this area. So a sweep would be a return back into the range, forming your purge. So an important thing to keep in mind is when are you looking for a sweep and when are you looking for a liquidity run? So I explained this before, so I'm going to keep this pretty quick. If it's a bullish trend, let's say it's a bullish trend. And in this case, let's say you're targeting this swing high. If you're targeting this swing high right here, if you're targeting this swing high, if price approaches this level, you're not looking for a sweep. You're not looking for price to come back inside of the range. Now, price could come back inside of the range if the profile of the market is supply and demand, which I explained this previously in other lessons. We're not going to waste a lot of time. But let's say you're targeting your swing low in a bullish trend. Now what you could wait for is price to come down here, sweep, and then continue the bullish trend. So keep in mind, you always want to go along with the trend. So what do you look for when you look for a high probability liquidity sweep? First thing you want to locate is your range. So now you have your range. So let's say in this case, this is a uptrend. And in a uptrend, you see an expansion after your range. So what does that mean? That means price was purchased by the institutions from a demand zone. So you mark that level out. So now you have your failed demand zone and price did not break structure. So when price does come back to that area, you can anticipate a sweep. You can anticipate a stop hunt / purge or whatever you want to call it, a trap for price to reverse and continue the bullish way. So let's take a look at this example. So what do we have here? Let's mark up our range. Everything starts off with our range. So we have our swing low, swing high, and now we could say that price is operating inside of this range. Price is operating inside of this range. So now, what do? You pull out your fib. And obviously, if you're an experienced trader, you wouldn't need the fib anymore. You can basically eye trace this thing. But just for educational purposes, let's use the fib, and this is the settings. And these are the settings. So your fib shows you that you have your premium. You have your premium level right here. And you have your discount level right here. So what does this mean? This means this is your demand level in this range. This is where price would be bought for cheap. This is what discount means. And this would be your premium level, which means the price would be sold for cheap in this level. So now that you have your levels, we understand that we are looking for a bullish setup. Now that we're looking for a bullish setup, we're strictly focusing on our discount level. So now let's focus on our discount level. Let's wait for our interaction. So now we have our interaction. Now, if price does react from this level and break structure, we have no reason to come back down here unless price is going to continue bearish. If price does break structure and come down back to this level again, we can anticipate a trend change. But if price does not break this level, what are we anticipating? If we get a reaction right here and price comes back inside of the range, now we are looking for a stop hunt to take this level out. We're looking for our liquidity sweep. So let's see. Is price going to break this level? And what happened here? Let's remove everything and keep it clear. we had a reaction from this demand level. This demand level tried to push price, but found rejection in our what level? Our premium level. Remember what we marked up previously? Price found rejection. That means price was sold in this level. So what does that tell us? Now we are focusing on this swing. Now that you have this swing, we're looking for a stop hunt. And how do you assure a stop hunt? When price comes inside of the range with velocity, wicks below or even closes below, but comes back up really quick. And this would be our liquidity sweep. Look how fast price came down this level and quickly came back inside of this new micro range. Look how fast. Price quickly came down here and quickly came back up for air. So once price goes underwater real quick and comes back up for air really fast, this tells us that this is a sweep. And again, nothing is 100% perfect in trading, but probability wise, this is an ideal trade. So now what do you anticipate? You can now anticipate price to either expand and break structure, or price could consolidate for a little bit and then expand and break structure. And price broke structure. And another way to look at it, if you completely erase everything, what's another way to look at this setup, which is our high probability liquidity sweep? Another way to look at it would be from our Wyckoff standpoint. So this would be our selling climax. This would be our test. This would be our purge. And this would be our RTO, return to origin. So that's another way to look at it. So let's look at the next example. Before you proceed, please make sure you like the video and leave a comment. This video is completely unmonetized. So let's take a look at this example. So what happened here? Prior to this, you can see that the trend is bullish. So we're strictly looking for bullish setups, as you can see previously. So what do we have here? We had a range. We had a range right here. And we had our low right here. So we have our swing high and swing low. And if you pull out your demand level, your discount level, which would be right here, you can see that price reacted from this level. And please pay attention. Price reacted from this level and expanded. But what happened? Price did not get over this level, did not break structure to continue the supply and demand market structure trend. Price found rejection at our what? Our premium. So what does that tell us? Instantly, once that happens, you're instantly targeting this level. You're targeting this level that was responsible for the reaction. Let's bring the reaction real quick. We're instantly targeting this level. Why? Because this is our liquidity. This is the last place where business was conducted. So what we are waiting for now is simply price coming down here, trapping really hard and coming back up quickly. And once that happens, we can confirm the price will no longer continue in a bearish trend, and we can anticipate a bullish expansion to continue the macro bullish trend. So what happened? Price came below this level and quickly came back up for air. So what does this tell us? That the bullish trend will more than likely continue. And price broke structure, finally, to continue the bullish trend. And what are the clues here? not only do you have the entire context to the setup prior to the setup occurring, you also have your approachment. Your approachment is the way price approaches the level. So look at the way price approached this level. What do you see here? I'll give you some time. What do you see? How is this approachment different to any previous price action? Okay, so the difference in the approachment here is look at the move to the downside. If you look at this move, look how quick and how big these red candles are. Each one of these candles is 1 hour. So in 1 hour, price moved a certain amount of points, and in another hour, price moved a certain amount of points. Consolidated a little bit here, but quickly came down for another big candle. And if you look at previous bearish moves, look how price struggled in this area to come down. Price had to move in this fashion, had to move in a micro supply and demand structure. But in this case, price just quickly dropped, and it mirrors the bullish runs. If you look at the bullish runs right here, look at the bullish runs right here, and you look even at the bullish runs post the stop hunt. So this is our main clue, the way price approached our stop hunt. It approached it in a quicker way than any previous down move. If you look at any previous down move, you can see that price was struggling to go down. But when price targeted this liquidity level, price came down in a hurry. So let's proceed. What are we waiting for? We're waiting for a reaction and a failure to break structure. So as you can see here, this would have been a fair setup if price actually struggled in this area. If price did not break structure right here and then came down right here, then we would have been looking at a liquidity sweep setup. What do we have here? Nothing yet. Let's keep looking. Nothing yet. Okay. So what do we have here? First, we had our range. So first thing you want to do is your swing low and your swing high. So now that we marked our range, this current range, what are we looking for is did this swing low come from a previous reaction? Did it come from a previous swing low? And if you look to the left, you can see that price did react from this level to continue above. So now what do you have? You have a reaction from your discount level right here. And once price reacted from the discount level, it reacted again from your premium. So price did react from our discount and reacted from our premium. So what are we waiting for now? We can mark up this swing, which was our initial reaction to the bull side, and we are waiting for the stop hunt to occur right below. By stop hunt, of course, I mean our liquidity sweep, which basically means the same thing. And as you can see, price quickly came down here. Price quickly came down here, took this liquidity and closed back inside of the range. And this is our stop hunt. This is our liquidity sweep. And we can anticipate price to continue higher. As you can see, price did break structure, close above, and continue higher. Hope you guys enjoyed this lesson. Make sure you like, share, and subscribe, and make sure you leave a comment. Let us know what lesson do you guys want us to cover next.